Hi, it's Erika, and welcome to today's Logo Quick Take. It's Wednesday, January 14th, 2026. Today we have a fairly broad-based sell-off in the U.S. markets, with higher beta stocks performing the worst of all groups. Within high beta, we have software stocks again lagging, plus higher valuation growth stocks getting hit particularly hard. The sectors and names one might expect to be defensive and even green on the day generally are. Our team has done extensive research in down market periods, and there are some stalwarts for down markets to consider. Today, here's how these alpha brands performed with the NASDAQ 100 index down about 1% and the S&P 500 index down about 0.5%. Walmart basically flat, Dollar Tree plus 2%, T-Mobile plus 1%, Merck plus 2.3% with most of healthcare up on the day. Staples were well bid with Clorox plus 2.2%, Colgate plus 1.6%, grocery brand Sprouts plus 0.50%. Basically, utilities, staples, REITs, energy, and healthcare, aka defensives, were green, and the beta trade was red with tech performing the worst. Here's the rub. Few are talking about. International stocks continue to perform better than U.S. stocks, and within international, emerging markets have a slight edge over developed markets. Asia remains the strong region, and this is important. Virtually every U.S. investor is underweight international and radically underweight emerging markets and Asia. That's the opportunity we see for right-sizing the portfolio. Most portfolios are overweight growth versus value as well, so this is a triple whammy for the average U.S. investor. They are chronically underweight the things that are working, so that's going to be a lingering conversation point going forward. This is a clear sign of the expectations for accelerating growth, weaker U.S. dollar, continued U.S. protectionism, and higher valuations, resulting in capital moving into potentially more intriguing areas. We think the money will rotate back into growth and tech, but for now, these areas are being used as a source of funds for other areas where portfolios are underexposed. One thing about defensives catching a bid that may be a signal is some of these stocks are breaking downtrends. In 2025, the defensive staples were pretty dreadful performers. Something to watch. We watch the discretionary to staples ratio pretty closely for clues on short-term market direction and to help us get ahead of major market pivots to consider. Thanks for listening. I'll talk to you tomorrow.